Hey everybody, my name is Gary Yao, and today I would like to share you some reasons why real estate doesn't seem to be slowing down or doesn't look like it's going to crash at least anytime soon. So with that, let's get started. As we all know, the market is heating up really fast, and it's not uncommon to see properties going up and selling for what they originally listed for. Some reasons why this is happening and it doesn't seem to is going to be slowing is because, for one, is low rates. We know interest rates. Interest rate doesn't seem to be going away. In fact, the Federal Reserve Chairman Jerome Powell mentioned that they are not even thinking about raising rates. So they reiterated that many times, which ensures that, well, it seems that because rates are low, more people can borrow money and they can buy the property that they wanted. And because we know that this is going to continue for a little bit longer, people are taking advantage of this. How does this work? Let's say, well, the Federal Reserve, they cannot lend the money directly to the mass population. They rely on intermediaries, in this case, the bank. So they lend this money to the bank at 0%. They are not charging interest on it. And the bank lend it to us at an average of 3.5%, 3.5%. That's about the national average of mortgage rates if you're going conventional or a VA. Now, the good thing about the bank, well, the bank is taking advantage of this because they are making the 3.5% profit, and they all have to pay back to the Federal Reserve is the money that they borrow without to give anything extra. So think about this. If you're the banker, you're borrowing all this money, infinite amount of money, and you can make infinite amount of profit because you don't have to pay the interest back. You only borrow, let's say, $1 billion, lend it at 3.5%, and give back the $1 billion later. And imagine if the inflation hits, that which is right now 2%, then you're paying less to the Federal Reserve than what you borrow. Keep in consideration, this is going to stay longer. Therefore, it is better for people that if they are in a position to borrow this money at a lower rate and buy an asset, then you see more and more people doing it now than ever. Second, low record inventory. We haven't seen this amount of low inventory since we don't know ever. And with more people going into the market looking to buy the first house and the prices of lumber going higher because of shipments and inflation, lumber hovering in the market, we can see that things are getting expensive. And developers and builders are not building a lot because they want to wait and see what's happening. That compounded by the fact that we're in forbearance and there's a moratorium on foreclosing and eviction processes. Adding all this means that there's less inventory in the market, a bunch of buyers that are trying to buy the same small amount of properties that are out there. It is not uncommon to see homes being sold for $1,000, $10,000, or even $100,000 over asking price. 3. Home buyers have more money post-pandemic. We're seeing an interesting economy occurring right now because a lot of the workers or employees that are allowed to work, that can transfer the skills to work from home, they are working from home. And they're saving more because there's no overhead. They don't need to drive to their location, thus saving gas. Restaurants are closed, so they're spending more time at home and cooking at home. So this has developed a very interesting economy, a recovery that we call the KLine Recovery. What this means? It means that half of the population is struggling, but the other half is thriving. The ones that can work from home, let's say if you're an architect or a graphic designer or anyone that can work from home, means that your skill set are more on demand than ever because people are working from home. And let's say that you're selling things like Amazon, right? Amazon has, I think they double or quadruple their output in the sales because, well, they are shipping more. People were afraid to go out. And the restaurants, let's say you're a restaurant and a park, movie theaters, entertainment, all these people are struggling because there's no gathering allowed. Therefore, we see this inverse or this difference between people struggling and people thriving. Yes? So the ones that have the money to buy, they have more money now than they did before the pandemic because they're saving more. And therefore, they can put a larger down payment on a house, or they can afford to buy a bigger house. 4, there's more demand, domestic and international. I didn't know this, but I just find out that people from other nations or other countries can come to the US and get the vaccine absolutely for free. Now, think about this, because there's more, because other countries are struggling as well as the US, if not more. The ones that can actually migrate to a better place, they will. And we're seeing that. We're seeing that business owners from Latin America, well, that I know of, they are actually moving their assets and they're setting shops here. Within thought that will be possible, right? But yeah, it is happening. It is happening at a very fast rate. Not only that, but the demand is so high that we're seeing that it's not uncommon to see a property with over 20, 30 offers at once. And that's because the competition is so fierce. 5th, the Federal Reserve and the government is pro-housing ownership. I think I just read the other day that Joe Biden is proposing for $25,000 down payment assistance for any new home buyers. And Bank of America is offering $17,500 down payment and closing cost assistance for new home buyers. And there's a myriad of other programs to help ownership. Now think about this. If, let's say, I am looking to buy a new house and the government is giving me an incentive to buy now than, well, let's say next year, then I will be more inclined to to buy a property. I want to take advantage of that $25,000 or $17,000 down payment assistance. But imagine how many renters and new home buyers and couples, let's say young married couples, will be inclined to do if they see this opportunity. That means more competition in a heated market that is going to last more. Therefore, home prices are going to continue to go higher, or creeping higher. And last is demographic shift. We heard about Silicon Valley moving to other areas. We heard also of Californians moving to other states like Texas and Florida and everywhere in the Midwest. This has created an even raise of home prices. Because now a property that's worth $1 million, let's say in San Francisco, a 2-bedroom, 1 apartment, 2-bedroom, 1 bath apartment in San Francisco, well, they can, with that kind of money, they can buy a 4-bedroom, 3-bath, perhaps 2,000, 2,500 square foot for less than that in, let's say, Ohio or in Texas. And we can see that areas are overheating so much that they are waiving also their appraisal value and they're selling for way over asking price. Based on all this, it's going to take a little longer. I will say that will take at least in this next 4 years, because there are countries that are still struggling with this pandemic. They are not opening, and with all that, it's going to take some time to adjust. And because of this struggle internationally, it's also affecting the US. It's affecting how we open, and we'll see. For now, I will say that if you can afford a house and you're in a position to buy, then buy. If you are not in a position to purchase, then don't be looking at the crowd and just look in your finances, work on your finances first before you make a decision. This is Gary Yao, and I will talk to you soon.